What's up, everyone? Welcome back to Sin City Crypto. I am David. I'm joined with your other co-host, Robin, and today we are discussing the long-awaited, everyone's waiting for Ethereum merge. Let's not waste any time, get right into it. Today, we're going to be talking about some pros, cons, and myths. First up, first pro, the issued block time decreases from 13 seconds to 12 seconds. Robin, is this something you are excited about, or do you think this is no-go?
For the block time?
For the new block time.
It is significant. I mean, it might not be anything drastic. It's not going to alleviate the throughput issues and the problem that Ethereum is most known for is basically the network congestion. But it does help it a little bit. Think about it. If you're achieving if you're achieving finality on your block time by almost 10%, that simply means that you can get 10% more transactions done in a 24-hour period, or 9 point whatever percent. And if that's the case, then I mean, more transactions, less wars on gas fees, because you can process more transactions. So, not anything that's going to drastically change the price of your gas fees, but could help it a little bit.
To me, it's all about volume. 1 second might not seem like a lot to you, but think about it this way. There are hedge funds and companies out there that use AI bots to trade in the stock market, and they literally trade off of 1 cent, 2 cent moves. And at large volumes, it adds up. Same thing with Ethereum. When you have multiple millions of transactions happening on the chain every single day, 1 second, although it might not seem a lot, does make a big difference. Let's move on. Second pro, the energy reduction of 99.95%. Obviously, this is good. Robin?
Well, this does pave the way for adoption of institutions that are hesitant because of the proof of work narrative. There is obviously a ESG concerns with a lot of companies, and they don't want exposure to an asset that negatively impacts the ESG rating. And everybody associates, or at least the legacy finance and traditional politicians, look at cryptocurrency proof of work as extremely a waste of energy. And that can be laid to rest, right? I mean, because with a proof of stake consensus, no more graphic card battles and hash rate. It's simply way more efficient. So that will open the door to institutions able to invest. Now, whether or not institutions will pile in, I don't think so right off of the jump, just because Ethereum and crypto in general is still a risk on asset. And I don't think that institutions are going to fray away from the norm, which is de-risking and going into the dollar and bonds and things of that nature. But when you do get a rally in the markets and that money is moving into tech-driven and more risk on assets, then at that point, you could see a huge rally of institutions into Ethereum. There's no reason to stop companies from getting into it.
Now, Robin mentioned ESG, and I'm not a fan of ESG. You watching are probably not either if you're in the crypto space. But at the end of the day, it's something that's here, and it's something that if you don't abide by, you're essentially blacklisted from getting any money poured in, any investment coming into your firm. So what does ESG stands for? Environment. At the current state, before the merge, Ethereum is definitely not environmentally friendly in the eyes of the ESG people. The S stands for social. We can argue that Ethereum does have a big social impact as it allows people to get into the DeFi space to essentially sometimes unbank themselves, and of course NFTs as well. And last one is governance. We can all agree that Ethereum governance is well above that of many, not only cryptocurrencies, but traditional markets as well, traditional companies as well. So when it does move to proof of stake, it checks that very last box. Well, it's the very first one, but the last one in Ethereum's case, which is environment. 99.95% reduction in energy waste is great. If anything, it's a narrative that people can latch onto. And if you remember, if you're watching our show yesterday, we talked about the Fed research paper that they put out on cryptocurrency. They specifically named Ethereum in their research paper as one of the projects that they can look to integrate into traditional finance. Does it have something to do with the merge coming? Possibly. I think so. Do you think so, Robin? If Ethereum was not merging to proof of stake, would the Fed have mentioned Ethereum in their?
I think so. I don't think the Fed is concerned with energy usage. They seem to be more concerned about what is most efficient to transact money and for the economy. And at its base layer, Ethereum is the largest network that has smart contracts enabled. So you can not only send value from one person to another or one institution to another, but you can also put parameters behind it in the form of smart contracts that can alleviate a lot of the third-party middlemen that we have now. Things just simply run more efficient. I think the Fed has recognized that. And I don't think that going to proof of stake essentially swayed their opinion on that side. I do want to say, I know we'll get into the cons here in a minute, but ultimately, there are some potential downfalls or some cons to moving over to proof of stake. However, if this merge comes out and we look back 3 years from now, if you can make an argument, or if it's widely accepted that the security of the network is as efficient or as secure as it was with proof of work without using the energy, then essentially what downside is there? If you have the same efficiency, you are the same chain, you do the same thing. Basically, Ethereum runs exactly in the same way it did before, but yet you use 99% less energy. And on top of that, you're as secure, if not more secure. What basis do you have what argument can you make that proof of work is better? Because right now it's just simply security and decentralization, right? But if you check both of those off and we look back and be like, well, still just as decentralized, if not more. And hey, it's just as secure, if not more. Then at that point, mission accomplished. And look at Bitcoin and be like, hey, is that still the best way of doing it?
Now, speaking of cons, con number one, more centralized and less reliable in terms of being battle tested. We know Ethereum and Bitcoin Bitcoin was the first cryptocurrency. Ethereum followed very short after. I'm not saying it was a second, but proof of work has been around longer than proof of stake. And so a lot of naysayers are saying that you're making a big mistake by switching over to a consensus protocol, essentially, that hasn't been battle tested, that hasn't been around long enough, that people haven't tried to manipulate, hack into. What are your thoughts on this?
Well, this has been in the roadmap almost shortly after they announced Ethereum. And so it was on the table. It's not like they decided to do this late. So when they created Ethereum, this was part of the grand vision. And so it's not something that they got forced into or pressured into because of some Greenpeace movement. It was what they thought was most efficient when they were building the protocol. So is there potential for downside? Yes. Is there potential for error and problems? Yes. And perhaps at the end of this, we'll look back and be like, wow, that was a mistake. You have the potential for more control in the form of centralization through the stake pool. And if you have to run a stake pool, you have to have a certain amount of Ethereum, a certain amount of money. And if you control enough stake pools, then more and more control of the network, or you have more influence.
So you're saying it can be more centralized?
Oh, 100%.
Because it is easier to go out and buy 32 Ethereum to become a validator than it is to go buy that same amount in computing
But
power.
it's not that black and white at the same time. And so stake pool operates. So you have, I don't know how many stake pools they have, but they're going to have thousands of them. And if they don't already. And that number, what I would expect is to grow as well. And so to control the network, for one, to gain more control in the network, you would have to control more and more stake pools. And these are divided up. And you can't kick somebody off of a stake pool. So if I decide to stake, my money's there. And, if I run a stake pool and hey, that's me. And if, another company wants to run a stake pool, they can't buy me out. They can just wait till I exit my position and they can buy more. And so for that reason, you can't take over the network by simply just pushing money into the system. You can over time by investing in more and more stake pools and more stake pools. But I mean, at the end of the day, it would be difficult, and there are checks and balances in place to prevent companies or even nation states from piling in and controlling the network.
So this debate will continue for until the end of time, until finally someone resolves it. Now, what's another con? My apologies. We have one con. Myth number one, lower transaction fees. Guys, you will not get lower transaction fees. We will not see lower transaction fees until sharding gets introduced, which we are still months, if not years away. So let's not get ahead of ourselves. We still have to make sure this merge goes off smoothly. Then you have the Shanghai upgrade, which will unlock tokens. And then finally, we'll start looking into sharding. But when the merge happens on the 13th through the 15th of September, you will not pay less money in transaction fees.
The gas wars, those are still going to be there. The only thing, as we mentioned, is that the finality of block time will decrease. So theoretically, you could see a reduction just because you're processing more transactions in a 24-hour period. You could see a reduction in, say, maybe 9%. However, would be easily mitigated if there's more use and utility and more people on the network transacting with Ethereum. So if the merge ends up being what people say and there's more people using Ethereum, there's going to be more demand and the gas fees will probably end up going up, probably higher than the offset of the block time finality dropping by 1 second.
I don't now at the height of the bull run, me personally saw Ethereum gas fees as high as $600, $700, $800 to mint a single NFT. I don't think we're going to reach those numbers, but I don't think you're going to see a giant reduction. I know you're not going to see a giant reduction in transaction fees like what a lot of people are expecting. Friends, that is a myth. And finally, the last myth, staked tokens will be immediately unlocked and dumped. Robin, would you like to speak on this?
There's no set date or time frame.
There's a range.
There's a window, and
about 6 to 12 months.
6 to 12 months. So after the merge, 6 months at the earliest. And then on top of that, you got to think of all the people that will lock up their Ethereum in that time window. So think about all the people that are going to look at the merge take place. They're going to say, hey, this is something I want to be a part of. Look, it's greener. It's working. The merge happened. It didn't break. It's here. It's more efficient. People are going to start entering into the ecosystem. And if you're holding Ethereum, you have no plans on selling it, why not stake it? And so even though you might have a wall of Ethereum getting unlocked 6 months after the merge, don't discount the fact that there's going to be new money entering in that's going to be locking up their Ethereum for staking throughout that whole process that will remain staked after the first 6 months. Will it cause a demand shock and a flood the market of sellers? Probably. Will it be something that would crash and be dramatic to the token? I don't think so. These people that locked up their tokens did it. Most of them, I would like to think, did it because they believed in Ethereum, they believed in the merge, and I don't think everybody's going to sell anyways.
Here's a perspective I want to bring out is if you staked your tokens in the new Ethereum ETH 2.0 at that time when they introduced the staking, you essentially gave up your tokens without a timeline. They just said, hey, you'll get it unlocked when the merge goes live. And if you know anything about Ethereum, They have always been behind schedule. This merge has been talked about for over 5 years. And so if you had enough conviction behind Ethereum to lock up your tokens without knowing exactly when it's going to be unlocked, it's not like traditional staking where you can pick 3 months, 6 months, 12 months. You literally had no idea. You could have had your token staked for more than 12 months, 2 years, 3 years, 5 years, who knows? And so if you had the confidence in Ethereum to do that, I highly doubt when it does get unstaked, you're going to completely dump everything on the market. So that is another myth. Friends, that'll do it for our video today. Comment if you are excited about the merge or if you're nervous about the merge or if you don't care. Let us know. Also, on your way out, make sure to like the video. Come join us Monday through Friday at 10:30 a.m. Vegas time for our live show. Until then, friends, we'll take care. Peace.